That I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for 12 months, or you can obtain a free trial by visiting investorsignals.com. Up on screens, the performance of our model portfolio. So inside the member area technology, you can subscribe to one or more of the model portfolios. This shows the average returns of the ASX 100 model and the US S&P 100 model over the last 5 years. If we just have a look at the financial year to date, the Aussie market has significantly outperformed the XJO, and again, this is the total return of the buy signals, and then likewise in the US over a 3-year period and a 5-year, it's outperformed. Now the recent pattern to note here is the lower low that and whilst this is not the XJO, this is the performance of the market, but what we're seeing at the moment is a low number of stocks in the model portfolios, which is reflective of the market sort of rallying back and creating a lower high structure. So if you'd like to know more about the model portfolio service and how you can subscribe to the buy and sell strategy around the models and execute the orders yourself, so obviously you could open a broking account and we can work in partnership with you, or you can simply subscribe to the technology and execute the orders yourself, through your existing online broker. If you'd like to know more about the Investor Signal services, please visit our website or call the office. Just recapping on US earnings, we're kind of into the third week at the moment. So when we started off, we kicked off with the major banks reporting. They popped on better trading revenue, but we've seen the banks in the US fall away. And on average, they've fallen probably something around 10 to 15% since announcing their earnings results. So that was week one. Week two, IBM kind of missed. So it's interesting in the US because of the analysts had lowered the earnings forecasts or estimates so much, and that picks up this comment here where S&P earnings are expected to decline on average by 44% in the June quarter. Which would be the worst quarter that we've seen since the GFC. What you're seeing at a headline level doesn't necessarily really draw investors' attention just to the extent of the damage being done to earnings. So a headline may read something to the effect of, IBM beats earnings by 5% or 10% or earnings expectation, but in reality, and I'm just using that as an example, earnings have fallen substantially. So especially in something like Coca-Cola, we've seen that. So just need to be mindful that the headlines may seem positive, but the underlying damage to earnings really is very substantial in the market. So the big question for investors is just at what rate do earnings recover from the damage that we're in at the moment. So this was week two earnings up there on screen. Some of those I'll update on the blog this week, just if you've got an interest in following US stocks. This week of note tonight, you got IAG, which is the insurance company in the big mortgage insurer. That was obviously the entity that was bailed out during the GFC. The US government became a substantial shareholder. I believe they're mostly sold out of their interest in IAG. But that'll be one just to make a note of. Tomorrow night you got Disney reporting. Now this is probably the ultimate recovery stock in the market. Clearly the business is going to be, revenues and profit is going to be down substantially over the last 3 months and going to continue to be for the most part of this year. But if we're looking out 12 or 24 months, does Disney return back to some normal trading conditions? And the answer is probably yes. The added interesting asset that Disney's building is Disney Plus, which is the competitor to Netflix. Low cost streaming subscription service. Also on Tuesday night, you got Allstate, big US insurance company, Fox, which was after the sale of the Fox media assets to Disney. Fox has ended up a slimmed down version of the original company, all those media assets or film and so forth were sold to Disney. Wednesday you got MetLife, and then on Thursday Bristol Myers. So again, I'll update you on the blog as we go through these. Now, as it stands, earnings are down somewhere. I think the number's going to be somewhere around that 30 to 40% that we're going to see S&P earnings down on average. So without spending too much time on this table, we've covered it in detail previously. But if you take roughly 35-40% off the prior earnings, we're back down at this level here. Seems feasible to me that fair value for the markets may be at around this 2,500 points. So I still argue that US equity markets are extended. But as we all know, interest rates are very low. But here we've got a graph of the Nasdaq. It's popped back above, so we spent a few days below the average, and then when we had the big tech companies, the FANG names, reporting on Thursday in the US, Google was a little bit soft, or Apple was a little bit below expectation with negative revenue. Apple was the standout performer, so between Apple, Facebook, Amazon, it's kicked the Nasdaq index back above the average, but still cautious that it's in overvalued territory, and I'll highlight on the blog when we next see it trade back below that average, and I think it's an important sort of momentum catalyst to sort of keep an eye on in the market. Something that I'll touch on tonight when we get into the going through the opportunities in review. This is a snapshot from within the member area, a new tool that we've added called the trade table. What this does is filter our signals using a sort of second and third filtering process for shorter term trading, and what this is saying is out of the ASX 20, and I've only just used that as an example for this screenshot, so out of the ASX 20 there's only one stock in the 20 that's showing both long-term, so alignment of all three time frames, essentially long-term, medium-term and short-term. So Brambles is one which I've been talking about on the blog and drawing your attention to, but again just highlighting that the signals there are all lining up. On the short side of the market, the ones that stand out to me that are CBA, Macquarie and Wesfarmers, so maybe have a look at a chart of those. On the earnings front, this Friday you've got IAG reporting. Next week's a full calendar week, so we'll start to update you on the blog as these earnings come through, and I'll tie some sort of commentary in on the earnings front as we go through the recording this evening. On that note, let's jump into the charts. Up on screen's a graph of the Nasdaq. So the picture's the same there as I highlighted on Thursday and Friday night. The market, and most of those tech results came out after the bell on Thursday night. So what Friday sort of captured that higher, stronger share price performance from Apple and Facebook in particular, so the Nasdaq jumped back above the average. But we want to keep an eye on this, and I'll highlight it on the blog as we start to see that trade below that level. The way I've got my software set up is under watch list 1. I've loaded in the 3 main indexes that I'm interested in. So if I go back to the chart, I can now move on, have a look at the S&P 500. Same thing, up, given that those tech stocks are a significant, I think roughly around 20% of the S&P 500. You're seeing strong performance there, but again on a valuation basis, the deterioration in underlying earnings, and ultimately, is there a catalyst that just causes a risk-off phase in the market? And we're probably getting pretty close to a level where you just, at least companies that are susceptible, so banking, tourism, etc., you just need to be very cautious of those in the current market. The XJOs ran in a resistance at around that 6,200 level. It's rolled over, trading below the average, but the Australian market's going to hold up okay whilst those US indices stay above that short-term average. So that's the relevance there of us focusing on that. But it is a market of two tails. The companies that are heavily exposed to revenue hits from the changing economic conditions versus, say, mining, healthcare, technology that are doing well. For tonight, what I wanted to do is, rather than toggle through the top 100 stocks as we did last week, what I'm going to do is come in here and go into my custom watch list. So in here, I've added stocks that I'm focusing on at the moment. I'll move through these fairly quickly because we'll revisit some of these names when I show you the next watch list that we're going to work with. So I'll just move through these in no particular order. So Vanguard Global Infrastructure Fund, this is under algorithm buy signals, and at around $52 that looks attractive, and we've been adding that into portfolios. Brambles, I like this. We've spoken in detail. The company provided guidance some months back, about 8 weeks ago, about 5 to 6% earnings growth. A couple of the analysts investment banks have downgraded their earnings outlook on Brambles, so it'll be an interesting result to see. But at around 10.50, I'm pretty comfortable that it offers a reasonable risk-reward scenario in the market, looking for that to trade back up towards that 11.50 level and taking profit up there, but certainly like Brambles, where it is retesting this 10.50 support. Bega Cheese, broadly speaking, companies within the food, spices, grocery area, where with the increase of people spending more time at home globally, we've seen them surprise to the upside on the recent earnings results. And Bega may be in a similar position there. So around that 430 level is support. Keep an eye on the shorter term indicators, and we want to see those continue to trend higher. Santos, we like that off that $5 support level. GDX, which is the Van Eyck Vector Gold Mining ETF, so gold's pushing up towards $2,000 an ounce at the moment, so you want to continue to stay exposed to gold, and I'll have a look at some of the individual stocks. But if we look back at the history here, the algorithm model's done a great job of highlighting the higher-low formation. So if you're joining us for the first time tonight, these green boxes at the bottom here are the algorithm buy signals. The green arrows, sort of more of a medium-term indicator, and then from a short-term trading point of view, we look at the stochastic and the moving average. But the primary algorithm engine is these signals up the top and the bottom here. So when we look at GDX, it's flagged the higher low structures through here, and the most recent signal there at around $45. The ETS performed very well from there. TPG, I continue to like this at around that sub $8, so think about adding that to your portfolio. This is the S&P Global Dividend Fund. This is going to take longer term to recover, given its broad exposure to industrial stocks globally, and generally lower growth but higher dividend. But down here at around this $14 to $15 range looks interesting to me. Orica, exposure to the mining sector, repaired their balance sheet, moved early to strengthen their capital position. Original sort of highlighting buyers of it around this 15.90 level, now pushing up to 17, but you can see there I've shuffled support line up at around that $17 level. Orica, in a strong market, should continue to push higher up towards that $18 level. Again, it'll be an interesting one to look closely through the earnings. CSL's corrected from 350 down to 270. We don't see a move lower in that type of magnitude too often. Obviously, there's some risk to short-term earnings, but we see sort of deep discounted entry level, maybe down around that 250 to 230 level, but we've been buying CSL at where it is at the moment. APA, I like this from a defensive cash flow standpoint. Has recently gone ex-dividend, so we don't see it trading too much higher in the short term. We're still sort of got 5 months to wait for the next dividend payment, but given the low interest rate environment, I could see money starting to flow back into this coming into the dividend. Maybe we could see that trade up towards $12. Primeticus, I'll flag this one on the blog at around this $24 level. I like Primeticus, high growth stock. It does trade on a high PE, but I've been trying to draw investors' attention to that through the recent posts on the blog. And one of those posts includes the update on the financials, which the company provide an investor presentation in March. So if you'd like to know more about Primeticus, or if you'd like to discuss that, please feel free to give me a call in the office. This is an interesting one. This came up as a recent buy signal here. So this is one of the benefits of the algorithm engine, is that it's scanning the market, and at 3:30 every day emailing you with a set of stocks that are making higher lows. So in this case, what it's picking up is the bullish trend here, and just drawing our attention to the fact that the stock's corrected roughly about 50% of this move here. And in this case, it's not a stock, it's an ETF, exchange traded fund. But at around this $57 to $58 level, this gives you broad exposure to predominantly US biotech, but global biotech sector. So I think around that sort of 57 to $58, we're likely to see this find support and start to trade higher. So I've been flagging that on the blog over the last week or two. Ramsey Healthcare at around 60, we like that. Beta share, which is the B-bus, so this goes up in value if the market goes down. If we see that S&P and the Nasdaq roll over, you'd expect to see B-bus trade higher. And BBOS, which is the Aussie equivalent. So in the last few days, you've seen this rally from, so roughly put on $1 from say 780 up to today's high, which was around 880. So it's put on $1 over the last week or 10 days. At the moment, the indicators are still trending higher. Yank, which is the long US dollar or short Aussie dollar. So in a risk-off period where we see those indexes in the US roll over, you'd expect to see the Aussie move lower. So that's one way of benefiting from it. So again, this is a list of the stocks that we have active positions in, and I've just put them all in a watch list there, and we're back to the beginning. So the next thing I want to point out within the software is going from the watch list. If you've missed reading the blog, or you just want to revisit what it is that is being flagged on the blog, this particular watch list stores the last 30 days of signals from the blog. So I'll click on that. We'll organise it in percentage gains today. We'll have a look at the stocks that are under buy signal. So as I move through these, we're going to be looking at the best performers under buy signal today, and we'll get to a point where throughout the list it switches from stocks that are under buy into stocks that are under sell conditions, and I'll just highlight when that happens. So TPG, as I mentioned, so analysts have, I think, sort of frightened the market a little bit about a research paper that was put out regarding the complications and the risks to the TPG longer term. We would like to sort of form that view over the coming months, but at the moment, at sub $8, this looks good value. Expecting it to find support and trade back up at around that 850 level. Northern Star, clearly gold and iron ore are the strong performers within the resource sector. Given that gold's holding up and looks like it's going to retest 2000, that there are some risks around the US equity market, the assumption has to be that gold's going to continue to move higher. So buying North Star on this small pullback here, support there at $15. And if you don't hold North Star, time to add it back into the portfolio. CSL, if you don't hold it, add it in at 270. Just watch your position sizing. You want to scale into the position. We're just not sure what the short-term impact to earnings look like. So we'll analyse those upcoming earnings results a lot closer. But what you're seeing there technically is support at around 270, and the short-term momentum indicators turning higher. So you could simply buy call options in this as a way of getting exposure to the upside, or just taking an outright position in the stock. APA Group, as I touched on earlier, we already covered that one. Primeticus, so urge you just to visit the website for Primeticus, where we'll start to cover this a lot more on the blog, but it could be an interesting long-term growth opportunity in the Australian market, and just keep an eye out for the headlines on the blog there, where I update you on Primeticus. Brambles, buying it here and letting it rally a little and then selling covered calls, you're turning a less than a 3% dividend yield into almost 10% cash flow. Brambles continues to move mostly sideways within this range of sort of $10.50 support and $11.50, $12 resistance. I think that's sort of a consolidation range that continues there for Brambles. Ramsey Healthcare impacted by closures or elective surgeries being cancelled. Or slowing down at least in given the current environment, especially in Victoria. Slow growth business, 2.5% dividend yield. Buy it on the dip, though. I think sort of the difficulties in trading conditions at the moment are a buying opportunity. Santos, $5 support. Oil's running into resistance at around $40. So we don't see these energy names moving too much higher short term, but comfortable that Santos offers good value there at $5 and provides some support. Beach, not our preferred exposure, but it one-off flagged on the blog, given it is under algorithm buy conditions, and we're seeing short term here the momentum indicator starting to move higher. Had a bullish close today. You just want to watch this to turn positive, but again, our preference is Santos over Beach. Alumina, worth keeping an eye on this over the next day or two. So the short-term indicators back into oversold conditions here. Support there at around 150, and looking for that to move a little bit higher there. AusNet Services, so this is a stock we were long off the buy signal here. We've taken profit, and I'll keep an eye on the fundamentals here and the earnings. But it's not sort of what I'd consider one of our core portfolio holdings anymore. Bega Cheese, covered that, but again, just revisit that at around that 440 level. Looks to be developing support there. Sydney Airport's high risk, probably not going to pay a dividend for all of next year. So we're going to see maybe normalised trading conditions towards the latter part of next year, but we may start to see the stock find support and begin trending higher, well ahead of that. So I've just flagged there that around that $5 looks to be support there. Orica, as I've covered that, we like that from a fundamental standpoint. Expect the earnings to surprise on the upside. Incitec Pivot, our preference is Orica over Incitec, but as I've mentioned, Incitec's moved early to shore up their balance sheet as well, but Orica looks better positioned. So now what's happened, you can see here we've switched from stocks that are under buy conditions to stocks that are under sell. So the most recent signal in Incitec Pivot was a sell. So I wouldn't normally sort of talk about buy side ideas that are under algorithm sell signals, but sometimes the fundamentals warrant, if nothing else, at least having the stock make its way onto kind of a shorter term watch list. Incitec Pivot is one that will sort of fits that bill. Rio, we continue to hold Rio and BHP. Iron ore, you've seen push up over $110. So Rio, BHP, Fortescue still remain well supported. Within the technology sector, cautious on some of these names. We like the long-term fundamentals of the business, but for the most part, they're starting to look a bit expensive. So we're on the short side of REA, we're on the short side of Seek. Amcor highlighted that it was getting a bit expensive up there at $15.50, and that's sold off. But it is. I'll bring into screen shortly a table for you to have a think about. AZJ. So if we think about the fundamentals here, the stock's offering a little over 4.5% dividend yield. At around 425, we're buyers of it again, simply on a yield support basis. So again, these are all stocks that have been flagged on the blog. Computer Share, see that running in a resistance there at around that 1350. So we're on the short side of Computer Share at the moment. Treasury Wines, just highlighting the resistance up there at around $12. South 32, we highlighted on the blog the potential of takeover. Then there hasn't been too many more rumblings in the market to support that idea, and we're expecting earnings to be down substantially. So we don't hold South 32. We're not short the stock, but maybe there's an opportunity on a weak result coming up over the next few weeks to think about something there on the long side. Aristocrat, we're on the short side of this. We see risk to the downside with the upcoming earnings result there with Aristocrat. CBA are on the short side. I've highlighted in prior weeks the resistance there at 75. They report their earnings on the 12th of August. The consensus is earnings will be down about 10%. Dividend will be cut by 50%. But we remain cautious on the banks in general, and that's not just in Australia at a global level. CIMIC Group, we've seen them announce the sale of their 50% of their mining services business. Helps to shore up the balance sheet. We know the next sort of 6 or 12 months are going to be patchy for CIMIC, but the longer term story I think is attractive. They've de-risked the business through the sale of or exiting their Middle East exposure, but around this $20 should become support. Look for the shorter term momentum indicators to turn higher. Pretty comfortable that offers a reasonable recovery opportunity in what's likely to be a fairly difficult market. Seek is so we've seen them suspend their second half dividend. This is an example of where one of these tech stocks, I think they could be overpriced, and we might be surprises on the downside in the upcoming earnings results. Crown we've been on the short side of, and Crown and Star obviously struggling within that sort of tourism space at the moment. Worley's we've been on the short side of this, and continue to see that as difficult trading environment for them. So that was a recent blog post that we've toggled through there. Next, what I wanted to do is just go in and have a look at the recent signals. So the way this works, this stores the last 7 days of algorithm signals. So if you've missed seeing what stocks have switched to either sell or buy under that 3:30 scan, which happens each day and is emailed to you, this just stores the last 7 days of those signals. So if we just quickly go through these, and we'll get the percentage gain to the top, we'll get the ones under buy, and let's just have a look at what's been highlighted. So Medical Developments International, if this is a stock that I wanted to add to one of my watch lists, I simply go up here and select the watch list that I want to add it to, and it'll be stored in that watch list, and then you can later toggle through them. So this is a good way of sort of filtering out the names that you're interested in. AHZ comes onto the radar, so a couple of these we'll keep an eye on, and I'll update you on the blog. GLL, so support there around that $45 level. Now we get into stocks under sell signal. So we had the algorithm sell there in IGO at around 574, and it's sold off since then. Sell signal there in ASG. Sell signal there in TTM. ORE. So algorithm sell signals up there at around that 340. It's now pulled back below $3. Reese, REH, so again sell signal there up at around that 1030. It's trading lower than that. MLD, so we can see there the sell signal there. So the three signals lining up that you'd expect to see in the trade table. So when you've got the sell signal there, the short-term sell signal, and it below the moving average, that's when you'd expect to see sort of that highlighted in the trade table, and when I get through this list we'll have a look at that next. So Credit Corp Group was a signal on Friday, and the stock was down over 6% today. So a lot of these are sell signals at the moment. So that trade table formula, if we just click on that, we'll shift that to the ASX Top 20, and what this is now doing is saying filter the top 20 companies and show me on this side all the ones that are under primary algorithm buy signals, which is the green box up the top, the green box down the bottom, and then all the ones that are under short signal there. But what this does is highlight sort of that second and third level of filtering. So is that medium term indicator pointing higher? Yes. And is the price above the 10-day moving average? Yes. So if we jump in and have a look at a graph of that, what we'd expect to see is a buy signal, the green arrow, and the close above the average. Whereas if we look at the other side of it and say CBA, what I'd expect to see a sell signal, down arrow, and below the average. So if you're interested in shorter term trading, the trade table can provide a good tool for you for sort of anywhere from 5-10 days through to maybe 30-day type time frames, whereas the model portfolio, you're in stocks for months to years. So the software covers both trading and investing. Tonight, just to finish up on, I just wanted to touch a little bit on the international side, and to do that, what I want to do is share with you the custom watch list number 2 that I have, which is the US stocks that we've got on the watch list. So Raytheon Group, US military defense company, they recently merged with United Technology, so they have exposure to commercial aerospace, which has obviously had a significant hit to earnings, but we continue to like the long-term fundamentals of this business over a 2 to 3 year period. Verisign, so we can see this has switched from sell conditions to buy signals there, higher low at around that 195 and looks to be trending higher. Berkshire Hathaway under buy signals, we flagged this one on the blog at around 174, continues to push higher. Netflix, the two results were a little bit softer than analysts expected in the US were Netflix and Alphabet, but otherwise Netflix had been performing well up until the recent earnings result. Verizon within the telecommunications sector, so we like this. This is under buy signals and around that $56-$57. Fox reports earnings this week, so we'll have a look and see what they look like, and I'll update you on the blog. Johnson & Johnson, we can see this is under buy signals at around this 136, now pushing up to around 140, so we own that. We've sold covered calls over it. AMD was a recent buy signal there. Now this is the chip maker in competition to Intel. It had a signal there at around $50, pushing up to 77. We've taken profit on that at the moment. This is a ADI, which is the analog devices, recently switched to buy signal around that 110 level. Wells Fargo. So the US banks, actually, I think we've got Citigroup maybe next year. So I'll talk about the US banks in the context of this. So when the earnings results came out, the stocks, for the most part, jumped. In particular, Goldman Sachs. So if they had exposure to trading revenue, they popped after those earnings results. But we're seeing the financial sector in the US soften. So it doesn't. You shouldn't sort of see there's too much surprise that the Australian banking sector has remained under pressure, and the risks to defaulting loans or troubled loans across the banking sector globally, and I suspect that the worst is not really out in the open yet for Citigroup, but the same risks still sit for the Aussie banks, which is why we continue to sit on the short side of those. Eli Lilly, so this shifted to algorithm buy signals there at around 150, and this is a biotech stock in the Nasdaq, so top 100 company in the Nasdaq, but it's switched to buy. I flagged on the blog there, and we've started to build a position in that in portfolios around that $100 level, and there we are back to Raytheon. So if you'd like to have a look at what other US stocks are in there, you can come in here, select either the Nasdaq or the S&P 100 and toggle through those companies. When we send out tonight's recording or a copy of the recording, there'll be a link in there to this particular spreadsheet. So just recapping, so in the US, these are the stocks that we like at the moment, and you'll continue to see me update you on the blog regarding those. A couple of stocks we're on the short side of in the US, but focusing on our local market, as I mentioned, TPG sub $8 is a buy. Brambles we like, Northern Star we like, CSL, that's a buy. AWC around that sort of 150 level. Orica we continue to like. Santos, Newcrest, so Newcrest or North Star, Ramsey Healthcare at $60 is something that you want to have a think about. Sydney, higher risk obviously, but just keep that on your watch list. APA Group, we like that as defensive yield. Primeticus, just is one that certainly comes onto the radar now. Ramsey Healthcare, we've already covered that. ASX, we like the story here, but you are seeing slightly slower trading volumes, and we'd expect the upcoming earnings result to maybe, given that the company was only growing at around 3%, there may be risk to the downside, but it is a defensive area, or somewhat defensive, and 2 to 3% dividend yield in a reasonably defensive area of the market looks attractive in a low interest rate environment. On the short side of the market, bear, BBUS and BBOS, so the inverse ETFs, important to stop and continue to look at those as an instrument, especially if you see the Nasdaq trade below that 10-day average. The Vanguard Global Infrastructure ETF, and Cure, which is that biotech one, so just drawing your attention to that. On the short side of the market, Seek, REA, Aristocrat, Crown and SGR, maybe there's a bit more downside, but they have moved already substantially from that original shorting opportunity. CBA, we still lean on the short side of that coming into the result. Wally's, maybe we're getting close to covering that short. Wesfarmers, we like that on the short side. NAB, again, moving sort of a fair way from the original entry, but NAB, ANZ, and CBA, we still stay on the short side of that. Further down the page, I've just put, if we want to play a recovery in the banks, which I think we're probably still 3 to 4 months away from doing that, the Global Bank ETF, BNKS, IPL, our preference is Orica, South32, we've covered that. Telstra, just highlighting the upcoming demerger of the infrastructure co, so in the next 12 months, that there's analysis that suggests that could potentially unlock up to $2 of earnings, $2 of value per share. So as we get closer to that demerger date, I think the story for Telstra becomes attractive. GOR is a smaller gold stock. They've paid down nearly all of their debt, and with the gold price where it is, I see that as a strong growth opportunity in the market, and CIMIC is highlighted tonight. On the watch list, these stocks are under sell conditions, but ALD, which is the old Caltex business, so Ampol, to me, these are fairly defensive businesses that you just want to keep an eye on, that they're reaching sort of oversold levels. But Ampol, Transurban, we're looking for that to maybe just trade a little bit lower as an entry into that. Coca-Cola starting to look a little oversold. Woodside, so again, our preference is Santos over Woodside, but Woodside at $20 is starting to look cheap. Amcor on a pullback, maybe closer to $14. Cleanaway's found resistance at $2.20, and you're starting to see that correct lower a little. And next week's webinar, I'll move through the full top 100 stocks, and we'll cover some of these. So tonight's a bit more of a sort of summary where we're covering off on some of these different lists that we manage, and Origin as well. So Origin missed electricity sales were obviously lower. Natural gas out of the project up at Gladstone delivered terrific dividends through to Origin, as we've seen that continue to do over the last 18 months or so. So Origin, we still like the longer term story there, and maybe around that sort of 5.25's a good entry level. Thank you for listening in tonight, and if you'd like to discuss any of the strategies or the stocks covered in this evening's recording, or if you'd like to have a look at the members area, please give me a call, 1300 614 002.